we are going to talk about a system that a part of it, however, is currently in progress, mainly for short-term trades. So today we're actually going to focus mostly on the daily and the 4-hour chart, as the system itself works best on those two time frames. Not only, but the combination of the technical indicators, the system actually is used to trade retracements on trends in the direction of the trend and with minimum risk. So the system involves monitoring on, let's say, most, without saying all, currency pairs and commodities and indices, which actually involves a lot of time to spend on the chart, evaluating whether it's a trending market or ranging market. Simply things that we spoke about for a long time now. One thing that you need to know is that the system is extremely conservative, basically involving very small amount of risk, as the signals that the system generates involves rules that needs to be kept pretty well. Now, today's system is called Dual Stochastic Forex System. Basically, it's not a system that it exists from today or yesterday. Is the background of stochastic oscillators we've been talking about a long time, pretty much every time when we are using stochastic indicators. But we are also going to remind you today what is the usage of this particular oscillator. But before that, we need to evaluate what are the mechanics of the system itself, why we're using it in this order, and particularly what kind of signals it generates and how it's used. The first thing that comes to mind is why using two stochastic indicators. Okay, well, the first thing, ladies and gentlemen, is that the stochastic oscillators can be a valuable tool for all technical traders. Yet, of course, most of the traders usually use stochastics together with numerous unrelated indicators. Now, we've stated many times in our webinars the proper combinations between indicators that are also involving the stochastic oscillator itself. So randomly choosing any kind of indicators to combine them with stochastic with values that are by default are actually going to generate only harm to your accounts. However, we have found that using single stochastic oscillator usually doesn't produce consistent winning trades. Therefore, by request by some of our traders to develop a type of system that is producing low-risk trades with potential of profit of about 500 to 600 and maybe more pips of profit, we have come up with the idea to present today's system. However, the thing that comes to mind also for you to remember is that the time frames that are suggested in today's webinars should be kept as they are, as in smaller time frames, the faster and the slower stochastic oscillators are not yet fit for time frames lower than 4-hour charts. Some more aggressive traders could use them in an hourly chart. However, I'm not going to present this today in the webinar, as it's highly risky. Therefore, we're going to keep within the boundaries of the low risk and maximum profit system. However, the good news about the dual stochastic system, ladies and gentlemen, is that the results that the system produces are excellent. And what we've discovered is that the percentage of winning trades of this system can actually be made to be, to be created as an expert advisor. So if you have the ability to write on MQL, for example, you might be able to just develop an expert advisor that is low risk with higher profit potential on 4-hour and daily charts, and of course to just let it run on its own and produce the profits for yourselves. Now, when using the appropriate parameters, however, of this particular system, you have to always monitor the charts for a potential opportunity. If, of course, it's not an expert advisor to monitor that for you. Therefore, it's not a system that it's probably suitable for traders that are involved in other engagements during the day or over the night, for example, because in some case it might produce higher stress. Even though, of course, it's convenient to be used as 4-hour and daily charts, it actually needs to be monitored on most of the major currencies and commodities, or high volatile pairs, as well as you're actually looking for potential trades every day. Because if you want to make profits in a matter of 500 to 600 pips in, let's say, 10 trading days, or that's 2 calendar weeks, for example, that is highly possible, but only on one trade. So not every currency pair or commodity, or let's stick to the phrase of instrument, tradable instrument, can actually produce such signals. So basically you can wait weeks, months, maybe even a year without ending up, getting a signal that it's quite substantial so you can trade it. So with other words, the market needs to be trending up or down in order to get a valuable type of signal. Therefore, you have to monitor more than one tradable instrument to get profits, let's say, on a daily or weekly basis. Let's talk a little bit about the background of the stochastic. The first oscillator, the stochastic oscillator, as we've mentioned before, was developed in the late 1950s by a financial analyst called Dr. George Lane. The word stochastic itself comes from a Greek word that means aim, is a target, aim. And of course, generally, it's mostly used in finance in the world that usually refers to seemingly random pattern of value around given target. However, the basic idea during trends of this stochastic oscillator is that it will stay either in overbought or oversold conditions for the time being until the trend is over. That's why it's so valuable when combining it with a slower stochastic oscillator to give us a general signal for a short period of time. Which means that in a proper market conditions, like in a trending market, with other words, we can actually make about 5 to 6, maybe even more, hundreds of pips of profit in a matter of a week or 2 weeks, or maybe even for a longer period of time if the trend continues, which actually gives us the opportunity, let's say on a monthly basis, with only one lot to generate a profit of around $1,200. Let's say if we get the maximum potential of 600 pips per 2 weeks, that's about 20 working days, 1,200 pips of profit, which consists in $1,200 of profit in a matter of US dollars. So the first thing that comes to mind is how this particular indicator works, what are the particular inputs or the details on the system itself. So I'm not going to keep you waiting too long. without even discussing the calculation of the stochastic, which could be a little bit boring for some of you. Most, however, might be interested into what the percentage K, percentage D, the slowing line also mean, all of this, how it's calculated. This, however, we have in our separate webinar. In our past webinars, we have been discussing specifics of the basic oscillators, basic stochastic oscillators input and the data calculation. So if any one of you is interested in these particulars, you can just scroll in our YouTube channel where our webinars are uploaded once or twice a week, depending on the availability of our developers. You can review the details of any indicator that we've been talking about. The dual stochastic system, ladies and gentlemen, is an advanced indicator trading system involving two stochastic indicators, one on top of another. However, there are things in those indicators that we don't really need. And while, of course, some traders might be using the system with both lines of the stochastic, I am using it with only one of it. Simply put, I don't need any complications on my charts, especially when we speak about larger time frames. We don't need the one of the lines, we only need the main one. So let's just go ahead, plot our stochastic oscillator on our charts by firstly inputting the slower with 21, 10, and 4 parameters on our charts. For colors, as I mentioned, we don't really need the signal line, we need only the main line. Therefore, it would look like this on our charts with only one line. However, if we want to use it with both lines, as we mentioned before, you can just pick any color here and just input it. So basically this is what you are going to see. But the signal line, however, I don't really need it. Therefore, I'm only taking the colors of my background, which you can see, I'm just copying the background color, and I'm replacing it with the signal line's color, so that basically disappears from my chart. It's still there, but you don't see it because it's the same color as the background. Therefore, now we need to input our next stochastic oscillator. Just drag it from your navigator bar and drop it over the previous indicator, which is stochastic 21410. You can see here I've already inputted the signal line's colors, which is the same as the background, so I don't need to use it. I'm going to use a green line or something like low green color for my other indicator, which is the slowing one, and the parameters are 522, as you can see, and this is what we get, one on top of another. However, the interesting here with the dual stochastic system, it might seem a little bit, you know, over the edge, but to get a better look at what the trends are, basically the stochastic oscillator is mainly used for sideways trends, and to evaluate how good the trend is, how strong it is, we still need a moving average. So the moving average I'm usually using on such time frames like 4 hours in daily charts, I am always using the 21 exponential moving average. Or if you prefer to have the Bollinger Bands, you can always use the middle line, which is also a moving average, to you know, put it as an exponential with 21 period, and the rest of the Bollinger Bands, if you are considering using such, which pretty much I don't need, would also do the same job. And as you can see, the the parameters were input here as I've made it as a template so we can better see on our next charts and input it as fast as possible because you're pretty much going to flood down here the bar and below your charts a lot of instruments when you're tracking the price development with this particular system so you can further on see which one is valuable for you and which one is not. This is how the system looks like. It's nothing complicated. However, when it comes to deciding which trade, which particular currency pair to trade or commodity to trade or anything in a tradable instrument to take as a valuable signal, we have to scroll back in the past so we can see what the indicators are, how they work. So we can just go ahead and scroll back in a good trend, for example. Here we have a very good long-term trend on the euro versus the dollar on a daily trend. And we can see that the trend actually begins with the breaking of this particular level here as a strong support suggested by this morning star formation, which is also something that I would suggest for you to monitor. Now, candlestick patterns, ladies and gentlemen, are also very strong signals, can generate very strong signals, especially when we're looking at the trend reversals or trend continuations. Therefore, this is also something powerful that we should be looking at. Now, one thing we have to understand is what these indicators are showing. Now, we see that the green one is the slower stochastic. The red one is the faster stochastic. If you want to use it vice versa, that's up to you. Whatever colors you want to input, it's always up to you. But right now, it's just so happened that we have made it like this. But some might say, okay, for a faster, I might just want to use it vice versa. So this is what we're going to get. As you can see, it's already pre-made as to a template, so you can faster, easier, put it in on your charts. So as we mentioned, we see here that this particular level has been a strong resistance, later on a strong support level for some time, and then on it's been broken to develop a new trend starting from over here. And as you can see, that same level with a pattern called evening star here is bouncing off of that particular level. Now, it's only valuable as a trend when it starts trading well below that moving average, developing a 45 degrees trend. This is all right. It's good to use moving averages, probably only moving averages on longer time frames. However, what I'm interested in this particular system are the retracements of this particular trend. Because the question that most traders are asking themselves is, all right, the trend is starting. We have no idea for how long it's going to go. We have no idea when it's in and where it's going to reverse. So how am I going to be sure that the next time I take a short position here, the next time it's not going to reverse from there on? We have no 100% certainty. Therefore, later in the session, we're going to talk about exits and stop losses, which is also a very important part of this session. But why we're using the stochastic combination between two, slower and faster, is because we're interested in the opposites of the two indicators. As we see, the slower the stochastic indicator is, it is always going to stay in oversold conditions for the time being until that trend is valid. But what we're interested in is that the faster stochastic should always be in the extremes of the overbought situation when we generate signals, and vice versa for the slower stochastic to be in oversold conditions in order to generate a valuable signal. Now, as we can see here, the trend has started from here. It has retraced one more time in order to prove that the currently broken support level is now going to be a valuable resistance. So we're not actually going to enter here because that's not a valuable trade. Further on, when we speak about conservative trading, we need to only take those trades that are mostly valuable to us with minimum risk and higher potential profit. Therefore, our entry levels are simply here, here, and here. You can see it's pretty much on one and the same level. Also here, so the conditions in which this system flourishes is to always take positions when the price is touching or it's very close to the moving average. We have our stochastic, slowing stochastic in overbought conditions when it's in a downtrend. Our slower stochastic to be in oversold conditions to have our entry levels. Same conditions are met 2 more times, here and here. And we have 3 more opportunities to enter in a short position. Now this level here is not a valuable entry, even though it's a very strong volatility, very strong volume here. We can see the powerful bearish candlestick, especially when we speak about daily charts. That's a very large number of pips of profit here, but we're not entering it because the conditions of our system are not met. We see both indicators in oversold conditions, which actually might suggest that very soon we should exit only if our exit rules are met, which, as I mentioned, we're going to talk about later. So assuming that those conditions are not met for exiting our positions, we can see our indicator. Let me scratch that. Our faster stochastic is in its peak. It's in overbought conditions. The price is below or at the moving average. Our slower stochastic is also in flat or at oversold conditions, and we're going to be taking another short position here. During the time of the development of the trend itself, now we are now going to start monitoring for further conditions, whether the trend is going to be continuing, whether we have more opportunities to enter, or our exit conditions are met. Scrolling further down the line, we can see that the moving average has been broken multiple times, speaking of daily charts. However, given the fact that our entries were here, the last entry, and it's very far away from the price where we currently are, let's say here, our exit is still not met. Therefore, our positions keep going. They keep going for the time being when the system is actually, sorry, we were here, when the system is actually triggering one of our stop losses or take profits, in other words, therefore generating a potential exit for all or most of our position. That's by your choosing. Now, I would definitely choose to exit all of my positions because, speaking of in terms of time frames, daily charts, ladies and gentlemen, are actually those time frames where one of our target is reached and confirmed. That means we have to pretty much close everything because the market is going to end up in a sideways direction before resuming the trend or reversing it. So we're not going to risk further on staying on the sideways. Rather than that, we're going to cash in on those profits and use that profit elsewhere in another trade with, you know, so far we've generated good profits. Let's measure. We have started from, let's zoom out a little bit. We have started from over here, and we've made it so far over here. That's about 2,000 pips of profit. That's just what it is. And that's on one of the position, okay? There are multiple positions here. So 244 days of trading, we have generated about 2,000 pips. Okay, but when we count that, these are 1, 2, 3 positions, 4, 5 positions, 6 positions, 7 positions, 8 positions. All these pips, not only from the first 3, but let's say only from the first 3, that's 6,000 pips of profit for 244 days. So, given the fact that for the time period, 6,000 pips on one lot is about $60,000, well, I'm pretty sure that all of these 10 pips that we've been using so far, average, let's say, have delivered over $100,000 of profit for the time period. And that's speaking of conservative type of trading, you see. If you only have about $2,000 of account, well, in a matter of a year and a half, you have made, what, about 2,000% profit? Well, that's pretty good, isn't it? I would consider that as a good conservative strategy. But this is only a fraction of what we're actually looking at. So this is only one currency pair and a trend that we have been on for some time. So there are opportunities on the market like these once a year, maybe twice a year. In other conditions, we might even see that the market has ended up in a very, very long-term sideways direction. So we need some smaller time frames, like let's say 4-hour chart. Same conditions here, as you can see, but only on a small time frame. Given the fact that our particular indicators are doing pretty much the same in these conditions, overbought in the faster, oversold on the slower indicator, the price is at or touching the moving average, we still have the potential of making another 400 pips in about 82 sessions, 82 for our candlesticks. Well, I would say that in a sideways market, we can also find a trend, but on a smaller time frames. However, as I mentioned earlier, I wouldn't suggest it for smaller frames as 4-hour charts or daily charts. Therefore, the idea of this conservative system involves constant monitoring on the charts, as the trend could actually, reverse or end up in a sideways direction just like that. But the suggestion here that I might make for our exits is, as an example, we can use in this dual stochastic system a trailing stop and a trailing stop loss. All of this will actually ease your pain from constantly monitoring for an exit. However, the positions that you have so far and the trailing stop and trailing stop loss parameters that you might be able to set in should be according to the time frame that you're looking at. So basically, when we have a perfect trend conditions, once the moving average is broken, we can see here that we have about 24 pips of retracement above it. Then the price continues. Then we have another 70 to 80 pips of retracement. That tells us that a little bit of background on the currency pair itself will not do us harm. only for us to research and see this currency pair in historical events, what were the pip size of all retracements in average basis, only for us to calculate what would be the trailing stop parameters for our present or future positions itself. This will ensure the security of our profits, the security of our accounts, and furthermore, as stated in the example here, it will best work in our trends, in our perfect trend conditions, as a technical trading system. One thing, however, is very important here to understand, ladies and gentlemen, that's the rules of this system. First, we have to have already a developed trend. That's why we're calling it a conservative system, because we already know that the trend is valid and the trend is continuing, but the riskier part from taking positions, further down the road of this trend, because the longer it actually continues, the higher the chances are for halting or reversing. So using this system by suggesting that the conditions of the stochastic oscillators and the moving averages, the moving average are met, we're ensuring ourselves that our profits will be with lower risk and higher potential. And this is one of the systems that we're going to talk about this week. On Friday, I have prepared another very interesting system for you. It's also highly conservative. Now, why I'm doing this, a lot of my traders here have actually, they've asked me if I can go for and be able to, present for them systems that are with lower risk but averagely higher potential profit. Well, there aren't many of these, so the higher the risk, the higher the profit potential. The smaller the risk, the smaller profit potential. But there are exceptions where monitoring a lot, and I'm saying a lot, maybe 10, 20, maybe all of the instruments that are tradable here on our platform, you might need to monitor for these particular opportunities. Because not every time we will find a trend perfect like this one, for example, or on the daily chart, as we mentioned earlier, which will actually be going for a year or two. Now, that is why we need a lot of currency pairs, so we can have positions opened all the time, but for that case, we will need higher balance. So we can keep on adding to our positions, and this brings me back to our previous webinar, which is the carry trade. So depending on the currency pair that you've chosen, if it has a negative or positive swap rate, this system will also help you, add into those positions on a lower risk with higher profit potential. Also, the previous webinar will help you evaluate which currency pair to trade, which is worth trading, because holding it for a year or two, as we know, $6.5 or even more of negative swap rates every day might also cut off from our future profits, and that's not something that we want. Basically, we're talking about conservative strategy. That's why all of the commissions that you're paying on a lot, or all of the swap rates that you're paying over the night, all of this has to be brought down to minimum. How to do that? Combine those two webinars, those two systems, and you will see how you will have a Now, before we depart in today's webinar, let's have a look at another cases. We have the highly volatile, extremely sensitive to interest rate changes, gold here. Also daily chart. We have the opportunity for long positions here on our daily chart. However, the one thing the system presented today is mostly suitable for short positions, but that doesn't mean that on uptrends you cannot trade it. You can also trade it without a problem. We can see from a sideways direction here, our trend starts developing. The first case of a proven trend is that peak here. However, as I mentioned, on uptrends, we have to have those two indicators vice versa, which means our stochastic, faster stochastic, has to be down here in oversold conditions. Our slower stochastic now have to be in overbought conditions, and the price have to be close or at the 21 exponential moving average. So the first case we have an opportunity is up here. When I mentioned, one more time, conservative, that involves a missed opportunity such as this. Okay, $123. Okay, that's a missed opportunity, but we're talking about a conservative strategy that generates high probability trades, but that means that it's going to be once in a while. So we have to wait until you get that particular case like this one, for example. From here, and our exit comes over here with about 44 pips profit, which is still a substantial $440 worth of dollars, which in a period of 1 month is still saying one instrument. Let's see what the system is worth in, let's say, a downtrend. We have something like a very huge head and shoulders formation, but it's confirmed down here when the neckline is broken, the two heads here and here. So from here on we can trade. Previously we already mentioned that it's very easy to determine whether the trend is valid. You know, a retracement with another drop, a retracement to the moving average with another drop. Therefore, the perfect case is here on this small doji, or in this one, the same. But we see our fast stochastic in overbought, the slower in oversold. Conditions are met, close or at the moving average, and a potential profit of 600 pips in a matter of 10 trading days. That's 2 weeks. So that's $6,000 on one lot for 2 weeks. Moving further back, let's check. We have our sideways direction. You can see the channel, sideways channel confined between those two prices. We have another break of the trend, another opportunity, sideways direction for quite some time. The conditions are not met. We don't have extremum. We have one over here, but our stochastic is already rising. So this system, ladies and gentlemen, are protecting us from a potential trend reversal, as you can see. Because we don't want to end up in a position that we're holding for, let's say, from here to here, that's 180 days, and just end up in a, what, nothing. Or even if you have decided somehow to enter here, you hold it for about 90 days, only to result in a 700 pips of loss. That's why the perfect conditions for this system to flourish is an already ongoing trend. Conditions met as this one is just a fraction of the system. One more time. Overbought on the fast stochastic, oversold on the slow stochastic. The price is or at, close or at the 21 exponential to make a trade and cash in on a 600 profits for 10 days. Even if it keeps scrolling backwards, we're still going to meet with the same conditions without a problem. So I would say let's check with another currency pair. That would be the pound. So let's see where we're at. Okay, we're here. The next potential trend development, it's deriving from that channel, sideways direction here and here. As we can see how it's closing it down in a triangle here. You can see that trend line with the flat line here, that's triangle. It's been broken down with a retracement here, giving us the opportunity to enter, because sometimes you will get a position like this one, you know, a perfect triangle. Let's just go ahead and do it. Triangle here, confined like this, as you can see. And in our previous teachings, we know that those triangles are very easy to trade, very good to trade. So we have a broken trend, a broken triangle here with a false breakout. The price is driving is there, but even though we don't have the perfect conditions yet, the trend has not developed. We don't have a narrow 21 moving average, 45 degrees, as we mentioned earlier. We don't have the conditions met as this one, overbought on the stochastic, the fast stochastic, oversold on the slower stochastic, the price or at or close to the 21 exponential, to trade to here or to here when it's broken 490, let's say 500 pips in 31 days or 30 days. That's about 3 weeks of worth of trading, giving us about $5,000 for less than a month with only one lot. And that's only one instrument. But you get the picture. I'm not going to exhaust you anymore with different currency pairs. I have a lot down here, even exotics. But that I leave to you as time is pressing on and we need to evaluate onto tomorrow's trade, as we always do every day. And provide you, of course, with recommendations, as we usually do, but only for those that are trading within our firm or so-called traders of GDMFX. That's all for today. I'll see you next time with more advanced trading systems. And the next one on this Friday's webinar will also be conservative, focusing on the larger time frames, because we're focusing this month on smaller risk with higher profit potential, and we're exhausting most of the valuable systems that we can offer you. That's all for today. Thank you very much for being with us. I'll see you on Friday, same time, same place. Thank you. Bye-bye.